what we've seen in the developing world in the last 20 years or so is something called the development of microfinance. This was developed initially by the Grameen Bank in Bangladesh and has spread quite widely around developing countries, which gives very, very small amounts of capital, which the private capital market does not supply. Very, very small amounts of capital for people to invest in small village and domestic industries which can strengthen people's livelihoods, increase their capacity to adapt to climate variability and change, and gradually increase their wealth and their opportunities. And so what we are saying is that now you could expand microfinance by including an insurance element in that, also at a very low level, because most of the activities of livelihoods of poor people in poor countries are not covered by insurance. There is virtually no insurance industry in those countries, certainly not at the rural level. And if you could start in the way that we did with microfinance, microinsurance, that would help tide people over the period of risk when they experience a drought or a flood or some other adverse climate effect. Moreover, you could provide that insurance in a manner which would encourage them to take adaptive actions. In other words, if the microinsurance were to be provided by some form of public-private cooperation, there could be a public element in that which helps to provide the insurance at an affordable rate for the people until such time as their resources and their wealth has sufficiently increased for them to be able to afford to pay the full actuarial rate of the premium themselves. So it is an idea both of spreading risk and of helping to promote the idea of adaptation.